What if one of the most important moves in the automotive industry wasn't announced with a flashy product launch, a revolutionary battery, or a billion-dollar investment? What if it happened quietly, almost unnoticed, while everyone was focused on something else? For years, the auto industry seemed completely convinced that the future belonged to electric vehicles. Automakers rushed to launch EVs, governments announced aggressive electrification plans, and billions of dollars flowed into battery production. The direction appeared obvious. But while the rest of the industry was racing toward the same destination, Toyota was making a move that many people didn't fully understand. At the time, it seemed strange. Today, it's starting to look surprisingly important. The question is simple. What did Toyota see that so many others missed? For years, Toyota faced criticism from analysts, journalists, and even competitors. The company was often accused of moving too slowly toward an all-electric future. While rivals were making bold promises about abandoning gasoline engines, Toyota continued investing heavily in hybrids. To many observers, it looked like the company was resisting change. Critics argued Toyota was risking its future by refusing to fully commit to EV. But inside Toyota, executives believed the industry was making a dangerous assumption. They believed that predicting the future was much easier than actually building it. Toyota's leadership repeatedly argued that the transition to cleaner transportation would be more complicated than many forecasts suggested. Different countries had different infrastructure, different consumers had different needs, and most importantly, different markets would adopt new technologies at different speeds. While some people viewed this as an excuse, Toyota viewed it as reality. The company believed flexibility would become one of the most valuable assets in the automotive industry. And that's where the move that caught the industry off guard began to take shape. Instead of choosing a single path, Toyota quietly expanded its ability to operate across multiple paths at once. The company continued improving hybrid systems, investing in EV technology, researching advanced batteries, and exploring alternative energy solutions. At first glance, this approach looked less exciting than the strategies being announced by competitors. There were no dramatic headlines, no declarations that one technology would replace all others. But Toyota wasn't trying to win the headline battle. It was preparing for uncertainty. And that distinction would become increasingly important as the industry evolved. Then something unexpected started happening. Electric vehicle adoption continued growing, but not always at the pace many companies had predicted. Some markets embraced EVs quickly. Others moved more slowly. Charging infrastructure expanded, but unevenly. Battery costs improved, but affordability remained a challenge for many consumers. Suddenly, the future looked far less predictable than it had only a few years earlier. And this is where Toyota's strategy began attracting attention from people who had previously dismissed it. Because while some automakers found themselves adjusting plans and reevaluating expectations, Toyota remained remarkably stable. Hybrid demand continued growing. Consumers who weren't ready to switch fully to EVs found Toyota's products appealing. The company wasn't forced to choose between today's market and tomorrow's market because it was participating in both. What many critics once viewed as hesitation was starting to look more like preparation. And this is where the story starts to get interesting. But this only matters once you see what happened next. As economic pressures increased and competition intensified, automakers faced a difficult challenge. It wasn't enough to build innovative products. They also had to build profitable products. Companies discovered that scaling new technologies across global markets was far more difficult than making announcements about them. Investors began paying closer attention to margins, production efficiency, and long-term sustainability. Suddenly, execution mattered just as much as vision. And Toyota had spent years building a strategy around execution. What caught the industry off guard wasn't a specific vehicle or a specific technology. It was Toyota's ability to remain flexible while others became increasingly dependent on a single outcome. The company wasn't betting that hybrids would replace EV. It wasn't betting against electrification. It was betting that the future would be more complicated than most people expected. And as new challenges emerged across the industry, that assumption started looking increasingly reasonable. The irony is that Toyota's move seemed boring when it first happened. Investors often prefer bold predictions. Headlines favor dramatic announcements. Consumers are naturally attracted to revolutionary ideas. Flexibility rarely generates excitement. But over time, flexibility can become incredibly valuable. Every new uncertainty in the market strengthened Toyota's position. Every unexpected challenge reinforced the importance of having multiple options. And every shift in consumer behavior reminded the industry that transitions rarely happen exactly as planned. At the same time, Toyota never stopped investing in the future. The company continued researching next-generation battery technologies, including solid-state batteries. It expanded electric vehicle development. It explored hydrogen solutions. In other words, Toyota wasn't avoiding the future. It was preparing for several different versions of it. While competitors focused on proving one vision correct, Toyota focused on remaining competitive regardless of which vision ultimately succeeded. That decision is what caught the industry off guard. People assumed Toyota was choosing hybrids over EVs. In reality, Toyota was choosing adaptability over certainty. The company understood that no executive analyst or government could perfectly predict how the next decade would unfold. Rather than making one giant bet, Toyota built a strategy designed to benefit from multiple outcomes. It wasn't the most exciting approach. It wasn't the most popular approach, but it may have been one of the smartest. Today, the conversation around Toyota looks very different from what it did just a few years ago. The company is no longer being discussed only as a manufacturer of hybrid vehicles. It is increasingly being discussed as a company that understood the risks of overconfidence. While much of the industry focused on a single destination, Toyota focused on the journey itself. And as the automotive world continues changing, that distinction becomes more important every year. The real lesson isn't whether Toyota was right or wrong. The real lesson is that industries often underestimate uncertainty. They assume technology adoption will follow a predictable path. They assume consumer behavior will change quickly. They assume the future can be mapped out years in advance. Toyota challenged those assumptions, and whether intentionally or not, that challenge forced the entire industry to think differently. So when people look back at this period in automotive history, they may not remember a specific announcement or a specific vehicle. They may remember something much more important. They may remember the moment Toyota made a move that almost nobody paid attention to at first. A move that quietly positioned the company for a future that turned out to be far more complex than anyone expected. And if that's true, then the move that caught the industry off guard wasn't just strategic. It may have changed the way the entire industry thinks about the future. And perhaps the most surprising part is that Toyota's move is still unfolding. Most people think major industry shifts happen overnight. A company announces a breakthrough, stock prices move, competitors react, and the market changes immediately. Reality is usually much slower. The biggest strategic decisions often reveal their true value years later. Toyota understood that. Instead of chasing short-term excitement, the company focused on positioning itself for long-term flexibility. At the time, that didn't generate many headlines. But now, the consequences are becoming harder to ignore as more automakers adjust production plans and rethink timelines. Toyota finds itself in a unique position. It doesn't need EV adoption to slow down in order to succeed. It doesn't need hybrid demand to dominate forever. The company has created a structure where multiple outcomes can work in its favor. That's an incredibly rare position in an industry where most manufacturers are heavily dependent on a specific future becoming reality. Toyota built optionality into its business, and in uncertain times, optionality can become one of the most valuable assets a company has. What's fascinating is how this changes the way we think about competition. For years, the narrative was simple. EV companies were the future. Everyone else was trying to catch up. But Toyota's move suggests something different. Maybe the real competition isn't between EVs and hybrids. Maybe it's between companies that can adapt and companies that can't, because technology changes. Markets change. Consumer preferences change. The companies that survive aren't always the ones with the most exciting products. Sometimes they're the ones best prepared for unexpected outcomes. And that's exactly what makes Toyota's strategy so difficult to evaluate. If EV adoption accelerates dramatically, Toyota is investing there too. If hybrid demand remains strong, Toyota is already a leader. If new battery technologies reshape the market, Toyota is actively developing them. The company isn't trying to predict a single winner. It's trying to remain relevant no matter who wins.